Hey, good morning, everybody. Welcome to the first Monday of June of 2019. Won't be long. We'll be halfway through this year. Yesterday or Friday was a pretty volatile day in the markets as we get ready to talk to Dave here in just a few moments. Just want to remind you of our free report that we're offering. Given all the market volatility we've seen, I think this is a great report everybody should have in their hands. And so it's understanding market corrections and what they mean to you. Text the word market to 863-285-3815. That's all you have to do is text the word market to 863-285-3815. Hey, hold tight. Dave will be with us in just a moment.
105.7 Light FM, Chainsmokers and Coldplay put together there. We're at 8:40 now. It's 20 before 9. Let's check in and find out what's going on with your money in Wall Street terms. Probably nothing good given the relationship we got with China. Let's head downtown to the offices of Statler Financial Services. Phillip Statler standing by, and boy, doggies, was Friday an ugly day on Wall Street, Phillip.
Yeah, it really was. We bounced down over 1%, closed down over 1% on Friday. Most indexes about 1.3%. So it was definitely a rough day on Wall Street. So
you can't shrug off a 354 Dow loss no matter how many rose-colored glasses you buy. And while it doesn't look like we're off to that kind of a quantity today, heaven only knows, because over the weekend, we were talking about this before we went on the air, the conversation between our nation and China in this trade war is starting to lapse from, boy, we got problems, to nationalistic, we're going to win come heck or high water. And we start getting into that, got to defeat the enemy. That just gets to the point where this ain't going nowhere good fast, is it?
No, you're absolutely right. That is a concern right now, is that, we get in this match that, hey, we're standing by our guns and we're not willing to be the first one to break. Now, I did see in the Wall Street Journal, there was an article that says China and Mexico signal some willingness to step up talks with the U.S. And I just got to think that between now and primary season, this thing's got to come to an end.
And we both have about the same instinct. I mean, the president's got to realize that with 25 or 30 Democratic candidates all banging the same line on him, that we're destroying the economy with this trade war, yada, yada, yada. Even if he's right, perception being reality, it's not going to work in his favor by the time primary season gets in earnest for the Democratic nomination.
No, it won't. We've talked about interest rates, and it's probably a good time to switch gears here, Dave, and just talk a little bit about interest rates, because I think it may play a little bit on this primary deal too. So we've got trade talks, right? And we've got the whole interest rate sliding precipitously, right? We've got the 10-year now actually touched at 2.08. Now, it's not there right now. It's at 2.11 on the 10-year, but still significantly low. I mean, that's the I think I saw where that's the lowest decline we've seen in 10 years in the month of May for the 10 year.
Oh, yeah. And in between the 10-year and the 3-month bill, the other one that we watch heavily, the 2 and the 5-year federal bonds are like at 1.88, 1.87%. Compare that to the 3-month yield at 2.3 and a penny or so. We're not only is it an inversion, but it kind of tells you what the smart money is saying. This ain't going to be a 3-month trade war. They're looking at it being 2 to 10 years.
Well, and that's true. And I think that I saw another article, and this is what I was going to, is that I think that we are seeing maybe that the traders expect that we'll see some declines in interest rates at the federal level. They expect most people expect two interest rate cuts from the Fed, somewhere between 50 basis points and 75 basis points from now to the end of the year. Now, I say that to say that, President Trump has been pushing for the Fed to lower interest rates.
And the Fed has been saying, heck no, won't do it. And this single over the weekend that that they could actually consider it is like a 180-degree reversal from what we've been hearing.
Yeah, that's true. And so I'm thinking, okay, maybe this is all the big plan, right? We're you got to read something into something, right? So maybe that's the big plan. He's trying to get interest rates lower, and this is a long way around to doing it. But if that works, then and they come to a trade agreement, then he may come out smelling like a rose on this deal.
We lower interest rates by a couple, by one or two times of those last two interest, and then we settle up, the trade war real quickly. The economy will take off like a rocket ship.
That's right. And so, I've always felt that Trump was he's a negotiator. Let's face it. He has always been a negotiator, and we don't know what the whole scheme of things are. But I was thinking about that this morning. That it looks to me like this could be playing into his hand.
Any other politician, I'd accuse you of wearing a tinfoil hat, but with Donald Trump, he's famous for his brinksmanship, and that wouldn't be outside of his playbook. I'm almost ready to buy that.
So we'll see. I mean, one of the articles did say though that that the traders may be reaching, or that we may be reaching the limit until we get as far as what interest rates are going to do, expecting some kind of help from the Fed, until we actually get some word out of the Fed that gives us some reason to believe that may be true.
Understood. Well, after Friday's party on Wall Street, we're solidly down, getting close to full correction territory again, which wasn't anything resembling what we wanted to see. Dow was off 354 points on Friday, NASDAQ off 114.5, and the Standard & Poor's down 36.8. As you mentioned, everybody down at least 1.3% on Friday, mostly off of jitters. And, frankly, nobody wants to leave money on the table, as fluid as the world can be, so we took an awful lot of it off on Friday afternoon. We're 45 minutes before we start throwing real money around this morning, Phillip. Kind of alluded to it. How bad, though, is the red ink so far this morning?
Well, it's red, not near as bad as Friday's close. Right now, the Dow's down 74 points. It's about 1/3%. The S&P's right there, the same boat, down 1/3%. NASDAQ's down 0.5% at $35.75. We do have gold, probably the highest I've seen it in quite some time, at $1,322 an ounce. That's up 0.9%. Silver still struggling. It's not getting over 15. It's up 1.2% this morning at $14.74 an ounce. We've got crude oil up significantly off of Friday's close. It's up 1.75% to 54.43 a barrel.
But still relatively healthy compared to the highs that we were at. World markets, everybody's taken a little bit of a bath this morning, but kind of like Friday, nowhere near as bad as Friday was here. Asian rim markets generally all off, ditto for Europe midway through their trading day. Somebody need advice to be able to kind of insulate yourself from the ups and downs of the next few months. Phillip, how do I get a hold of you for that advice on the phone?
Dave, and now's a great time. We've seen a lot of volatility. We've put together our free report on understanding market corrections. It's easy for you to get your copy. All you have to do is text the word market to 863-285-3815. It's that simple. And then catch us here at the office, 382-0037, to schedule your no-cost x-ray review so we can figure out how much risk you really have in your portfolio. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
Current information in long form that we can't get to here every weekend on News Talk 730. Thank you so much, Phillip, and we'll catch you tomorrow morning, all right?
All right, thanks, Dave. You take care.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Stop everything.
Well, I hope you enjoyed today's show. It was great talking with Dave this morning. I do want to remind you again about our free report on understanding market corrections. All you have to do to get your free copy is text the word market to 863-285-3815. That's text the word market to 863-285-3815 to get your free copy of Understanding Market Corrections. Hey, thanks for joining us today. I look forward to speaking with you again tomorrow. Until then, have a great day.